I think we're going to go ahead and get started. I'm Stephen Ju from the Credit Suisse Internet Equity Research Team. We're joined by Strauss Zelnick, CEO of Take-Two Interactive. So welcome, Strauss, and thanks for coming.
Thanks for having me.
All right, great. So let's launch right into it. So Take-Two and others in the industry move from having a development teams for to more of a constant follow-up with additional downloadable content in between major releases. Do you feel like, from a management perspective, that you have to run harder to stay still, or as you evaluate each franchise on its own merits, the return on invested capital has increased?
I think you always feel like you have to run harder, but hopefully not stand still. We're really pleased with the progress that we've made at this company in the last 6 years. Most investors have pretty much left the company for dead in 2007, and it was a pretty rough state of affairs. And despite a big market event in 2008, we've been able to create a great deal of value and to deliver on the promise being deliver a diverse array of the highest quality interactive entertainment experiences to consumers all around the globe, without regard to their platform or their business model or their demographic. And we've been able largely to do that while still maintaining the number one asset the company had, Grand Theft Auto. So we didn't lose anything in terms of what we had, and we added a whole lot, specifically the introduction of at least one new intellectual property every year since 2007. Today we have 9 franchises that have sold each at least one 5 million unit release, which is extraordinary. I think we have the best collection of owned intellectual property in the business. We have, I think, what is now, and certainly wasn't before, the top worldwide marketing and distribution system. I think most people in the business would agree with that if you look at our results pound for pound. And we have, for sure, the best creative teams in the business. So those are the assets we have. As you head into a platform transition, there's pressure placed on the business. I think you're alluding to that. And the companies that tend to survive and thrive are those with strong creative teams, strong owned intellectual property, strong technology, and a strong balance sheet. And we think we fill the bill on all 4 of those things. So are we always running harder? Yes, because this is very much a what have you done for me lately business, not just in rooms like this, but with regard to consumers too. And we're mindful of that. So we got a lot of great stuff to come.
Got it. So on your earnings call, you talked about acquisition opportunities as a potential use of cash. Will you be looking at content IP or technology or both? I mean, what are the right criteria to fit into the portfolio you're building?
Well, first and foremost, it seems to me that you only do deals when they're accretive. And it seems like that memo was lost by some of our peers in the business. But we only do accretive transactions. And by accretive, I don't mean pie in the sky accretive. I mean like dollars and cents EPS accretive. So we've been really selective. Our acquisitions over the years have been very small, driven by intellectual property and talent simultaneously. We now are blessed with a very strong balance sheet, and that gives us opportunity to spread our wings, but we remain highly disciplined value investors, and I don't think you should expect that to change. In terms of use of capital, there a number of opportunities. The first is, we built this thing on a shoestring, and our organic growth has been nothing short of extraordinary. In 2007, the company's revenues, excluding a non-core division which was divested, were about $700 million. Last fiscal year, so also a non-GTA year, they were about $1.2 billion. That's all organic growth. We're proud of that record, and we think that that's what we get paid for, to deliver that. It's nice to have some capital so that we can invest behind organic growth initiatives without having to cobble together every single investment with third parties. So you should expect more organic growth. Certainly we're driven by a focus on that. Secondarily, we have an opportunity to return capital to the shareholders. We just bought 16.2 million shares of stock. We deployed $270 million to do it. We're a cash-generating enterprise. We've said that we expect to be a cash-generating enterprise going forward. We expect to be profitable, and our profits do foot to cash. And then thirdly, we could look at accretive M&A, but I want to emphasize that's going to be both strategically and opportunistically driven. Strategically, in that it has to fit with our DNA, which is interactive entertainment and digital content, and opportunistically in that the values have to work.
Got it. So on the last call, you also talked about, and then you brought this up just now, the prospects for the company to be profitable for the foreseeable future. And I know you are reluctant to bring up very specific game release plans, but would you share with us the underlying business plan that is driving that financial expectation? Well,
we're being more forthcoming than we've ever been before. We've said I'm known to be pretty conservative with, I'm not much of a stock touter. And we've said we expect to be profitable next year and for the foreseeable future. Those are not words I use lightly. And I have yet to be wrong when I've said things like that. So that's a good deal of guidance. We've also said we have more than 10 projects in development for next gen, both current franchise, sequels, and new intellectual property. That's a lot of color on our upcoming release schedule, and a great deal of color. And beyond that, I'm frankly not sure what color would benefit you if I said, we have a title called, Stephen's Life in Elementary School next October, and I told you it was going to sell 20 million units. What credibility could that possibly have? New intellectual property is a risky business. So I think the news is we are pretty proud of the fact that we timed the completion of our current gen releases so well. We're really proud of the fact that our last several releases have been very successful in an exceedingly challenged market, not just the massive success of GTA 5, but also the success of BioShock and Borderlands 2, NBA, WWE. The fact that NBA is one of the most highly rated titles across the board for next gen is extraordinary to us, a sports title fitting the bill there. So we seem to be firing on all cylinders. I understand the market would like as much clarity as possible. In a pure play entertainment business, what I just said is an awful lot of clarity. I can't even really imagine how more clarity would help someone, because I would just be puffing. And I know that is not unlike some of our competitors, but it's just not what we do. We haven't done it for 6 years. Lord knows I'm not going to start now from a position. I didn't do it when I was in a position of weakness. Why on earth would I do it from a position of strength?
Gotcha. So you brought up the prospect of stock repurchase earlier, but with Grand Theft Auto, performing so well, you will be pretty flush with cash after this holiday season also, even with the repurchase. But, even after the repurchase of the shares held by Mr. Icahn, the stock has not really reacted. So does this color your stance on returning even more value to shareholders?
We didn't do the buyback in order to move the stock. I've been on the record about buybacks. Typically, buybacks don't create shareholder value unless they're done when the stock is trading at a deep discount to underlying value. And I've been on the record as saying it at conferences like these. I'm a big believer that don't look at what someone says, look at what they do. And I just voted with $270 million of our capital that I feel, this buyback fits the bill. That's just one man's opinion. And I defy you to find me any CEO who thinks his stock is overvalued. But it is our view that this was an opportune moment, and it was the right thing to do. And it's very simple. All you have to do is do a little tiny bit of balance sheet analysis, and you can take a look at what our enterprise is trading for.
Got it. So as a content creator, you obviously want to be where the consumers are, but the packaged goods model does not work in all geographies. So Take-Two's footprint is probably not as wide as it could be. And I'm of the mindset to think that good content should be able to travel anywhere. So what are your thoughts on alternative revenue models in other regions to be able to address those users who are waiting for your content?
Well, it's a great point. Asia, for example, China specifically is a free-to-play market, and that's why we entered China with a partner with Tencent, and NBA 2K Online is a free-to-play game that we monetize with in-game payments, and that's been viable for over a year and continues to do well. It's one of the top 10 games according to QQ Games in China. We have the free-to-play model in Korea as well with our baseball title. We've done a number of free-to-play titles over there. We've also experimented with mobile games built just for mobile in Japan quite successfully. So we've expanded into Asia with a mindset that's driven locally and says, okay, well, what do the Asian markets want? Not what do we want, but what do the Asian markets and consumers want? And we're equally flexible here, where we have put out some free-to-play titles, where we do have in-game payments available for our NBA title and also for GTA. And we're pleased with the progress that we're making on both. So we intend to be very, very flexible. That said, our DNA remains these very high-end AAA, immensely immersive experiences, and I don't really see us deviating from that. So where we'll be flexible is on the business model as much as possible. We'll certainly be flexible on channels of distribution. We'll be very flexible in the platforms we support, but I think where we probably are not going to deviate is quality and immersion. That is what we're known for.
Okay. I think at this point we'll open up the floor for some questions from the audience, but while we are waiting, I'll lob in a few more. So, for the first time ever in a console cycle, the new boxes are not shipping with backwards compatibility, which pretty much forces consumers to reacquire some of the content that they've already purchased for their library. So, do you think this move will be a hindrance against a more rapid adoption of this cycle? Or?
Well, they don't have to repurchase as long as they keep their old box plugged in, as long as it's still working, and with a switcher, which is no big deal. So, I don't see it as a problem at all, and there may be, certainly we have the physical ability to port, so that's not, and wouldn't be particularly costly. The question is there an economic opportunity for us to do so? I don't think backwards compatibility affects consumers at all.
Okay, understood.
Sorry.
Just two questions. First, vis-a-vis your outlook for next fiscal year, I know you're not giving too much detail, but is there any context you could give in terms of how much of that profit expectation is due to an expected contribution from GTA 5 revenue versus it being entirely non-GTA?
No, we haven't given our outlook yet, obviously, for the year, and we also haven't really talked much about GTA 5 beyond what we've done already, which is the release of the game itself, both physically and digitally, and the release of GTA Online. Certainly, we've announced that we have in-game payments. We haven't given a lot more clarity than that. You can certainly expect to have clarity over the coming months. So it would be premature to talk about that. But look, GTA 4 is still a revenue generator for us. GTA is a massive franchise for the company, and the frontline release is doing great, and the catalog would be expected to do great minimally, and that's without any other information.
And I know you're not providing a lot of information in terms of the online strategy and monetization, but from a high level, could you just talk to, given the genre of the game and so forth, if there's any reason from a digital standpoint it should monetize better or worse than other AAA titles out there that have big digital presences, think, a FIFA or a Battlefield or a, Call of Duty, so forth?
Well, remember, there are titles that have a big digital distribution presence through both frontline releases and downloadable content that don't have the ability to do in-game payments. So FIFA does, NBA does, GTA Online does. So that's a big distinction right there. But we haven't yet described what's going on. It's pretty early. We only switched on in-game payments pretty recently.
There's no reason it should be able to monetize better or worse than other large titles. I mean, is there anything that sets it apart or makes it different when we just think about the overarching monetization ability of that game in digital versus other large properties?
Yeah, because it's GTA. I mean, that's the biggest difference.
Which means it should be more monetizable on
I think it could be. It depends on how we do it. I have to tell you, we've announced we've sold in over 29 million units of the title. I feel like we've gotten well paid for our efforts. Our focus with GTA Online is to delight consumers. Well, the goods that we're selling in the game are intended to enhance the experience first and foremost. We are charging money for them, but the way we do business at Take-Two is first and foremost driven by this desire to delight consumers. That's why we have the highest Metacritic ratings in the business for the past 5 years. And not just because we're altruistic and we love doing it. By the way, we really do love doing it and we're passionate about it. But because I really have always been a believer in every entertainment business I've been in, that if you start by making consumers really, really happy, there's always an opportunity to make money on that basis. Many of our competitors really do think first about monetization and second about what they supply. We think first about what we're supplying and second about monetization. So it's not that I'm being coy about what's going on. We're really focused on making GTA Online an extraordinary experience, and we're new to this business. Unlike some of our competitors, we're new to it. We're unafraid to be honest about that. We didn't build a massive infrastructure in advance of GTA Online. We had some glitches along the way as a result. As a result, we kept the costs extraordinarily low as we explored this new marketplace. But it really is too soon. Could I imagine a world in which in-game monetization is very special because it's GTA? I absolutely could. Are we ready to say that now? We're certainly not.
And just one separate, somewhat unrelated question. When it comes to full game digital downloads, it seems like from a straight economic standpoint, it's neutral for yourself in the sense that you're either paying Best Buy or GameStop or whoever else margin, or you're paying it to Xbox or the PlayStation Network for their app game store fee. But the benefit of digital is that you have infinite abilities to merchandise and price and experiment around pricing and promoting your product, which you can't do in a physical world per se. So it seems like you have a benefit from that regard if more is shipping digitally. What's your expectation in terms of 2 years out, how much of full game downloads are digital, and what kind of benefit could that bring to your business?
Well, first of all, we do get some margin benefit, although, as you point out, it's not massive. Some of our competitors seem to think it's massive. I'd love to figure out why they think that. We've said repeatedly, we do get a modest margin benefit, and exactly the math you just referred to gives us a small benefit, and we're happy to have it. In any given quarter, our digitally distributed revenues, which is obviously frontline and catalog and DLC and represents 20 to 30% of our business, depending on what our business looks like. That's up from zero just a few short years ago. Hard to know what percentage of the business becomes digitally distributed. It seems to me, if history is any guide, we're moving very much in that direction. But we're ecumenical. Retail is an important partner for us. We're happy to support retail. It is the bulk of our business now. And we're not voting. We're saying wherever the consumer is, that's where we want to be, and we want to be a leader wherever that is. If I had to guess, I don't know. Maybe it goes from 20 or 30% to 40 or 50% in a pretty short time. Depends on the quarter. Yeah, it really does depend on the quarter. Sir.
Just similar to that question, how should we think about margins in terms of GTA monetization and things like that with in-game payments versus what you just spoke about in terms of full game downloads?
Let me not talk specifically about GTA, but obviously, we have to amortize the development cost. We write off our marketing costs. At a certain point in time, when those are amortized, everything else is gravy after you cut in your distributor. So you could imagine that margins go up over time with big hits, and that's true of all entertainment businesses. Sorry not to be more specific, but we're not giving.
And then just in terms of OpEx, as we're thinking going forward, supporting both current gen and next gen, would there be any reason to think that there would be a pickup in that in terms of R&D costs supporting both generations of consoles?
You mean that it'll get more expensive?
Mm-hmm.
No. That doesn't appear to be the case.
Cool. Thank you.
A question up here.
There's someone in front. Yeah.
When you look at the next generation of tablets that are coming out, especially the new iPad's got 64-bit, the ability for those tablets to actually, for a gamer or whatever, to use, high performance video games on those tablets, is that something that could be a pretty big growth driver in terms of the amount of people that have the accessibility to your products versus someone that has to either have a high performance computer or an Xbox or whatever going forward?
The short question is yes, but let's try it this way. 2 years ago, how many people in this room owned a tablet? 2 years ago. Now, how many people in this room own a tablet? 2 years ago, how many people in this room were taking notes on a tablet? And we're at a meeting like this, or on how many were taking notes on tablet versus paper? Let's say paper 2 years ago. You guys are pretty forward thinking. Today, how many of you are taking notes on paper? How many of you are taking notes? How many of you care enough to take notes? But anyway, you need a tablet. The answer is, look, tablets, I've been saying this for years. I said it before the iPad was launched, and we bet behind it. Tablets will be ubiquitous. They'll be used for interpersonal communications. They'll be used for business. They'll be used for entertainment purposes. Let me try another Q&A. How many of you believe in Moore's Law? Yeah, most of us believe. It's not, by the way, not everyone does believe Moore's Law. Moore's Law will come to an end at some point, in my opinion, but it's still, alive and kicking. By the way, Moore's Law was a tongue-in-cheek law when it was first. That's what I love about it. It was actually sort of like the Peter Principle, also tongue-in-cheek when it was first expressed, but of course turned out to be true. So if you believe that tablets would be ubiquitous, which I do, and Moore's Law, on the other hand, which I do, then that tells you tablets would be a perfectly fine entertainment platform for high-end immersive video games. If your view is that we ought to be everywhere without regard to business model or business partner, and that is our view, then we'll be making our titles available for tablets, and we'll do it through our own website and through Steam and Valve, and we'll do it through Sony and Microsoft if they support it, and anyone else who's legitimate and supports it and protects our intellectual property. And I think it's going to be a great system for video games and will vastly expand our marketplace.
And do you, like, over the next 5 years, do you see guys transitioning yourselves to like almost like a gaming as a service business model where, for example, like you've seen it with some of these sort of lower performance games that are done online where you buy, you know, like weapons or whatever, you buy tools, or is that something that you guys can move toward, like in terms of, like, let's use Grand Theft Auto as an example. It might be like a new car or something like that, and then users go on, download the new car, and they'll pay some sort of fee.
Well, you can do that in Grand Theft Auto online right now.
Okay.
Right this very minute. So, but what I think you're alluding to is a free-to-play system where it costs nothing to enter, and then you pay in-game. And that's a somewhat interesting model in Asia. For example, it's your only choice in China. We have to be flexible about it. In the U.S., it's not a very powerful model, certainly for us, because I'm not psyched about a business that, you know, 3% of your customers pay you, which is what you're dealing with. But again, we're flexible, and if that's the way the business evolves, as long as we can get paid and make a profit doing it, you know, we're happy to contemplate it. I'm skeptical that for very high-end products, that's the way the business goes. I think you'll continue to sell those high-end products as the entry point, and then you'll have in-game monetization for certain sold items and free items.
Just two quick ones. You mentioned NBA 2K Online in China in terms of the game rankings, but any other metrics you've given out in terms of the revenue run rate of that property? You know, obviously China's a big market, basketball's a huge sport there. Anything additional you can add?
We've said it's not huge for us yet. We've said that it is profitable and it contributes, but it is not massive yet. And beyond that, we haven't given more color.
What's the inhibitor to that being bigger than it is?
Well, the real inhibitor is that when we embarked on that project, 4.5 years ago, our company was much, much, much smaller. So for it to represent a meaningful part of our revenues, it has to be much, much, much bigger.
Understood.
But it's doing fine in China. It's not the number one game. And the sports games in general are not number one games over there. So it is like all entertainment businesses, you know, the very top titles do very, very, very well. So the inhibitor for it being huge would be it would have to be sort of top 1, 2, or 3, and it isn't there right now.
But is even I mean, as a percentage of your digital revenue, is it even? I'm looking at what your digital revenue is. Is it even? You know, over 10% of your digital.
Yeah, we're not. I don't want to parse it here. We haven't done that yet.
And then just one second quick question: how is the perception? Any view on how the perception of the video game industry, software industry, has changed for the media companies? It seemed like years ago there was a lot of interest by media companies getting into video games. Then that kind of seemed to fade a little bit. All the focus had been on online gaming, free-to-play, so forth, not so much console. Now we have a new console cycle in market. It's doing well, so forth. So have you seen any change in just perception by the traditional media companies in terms of the console video game software segment?
I have not. I mean, there are a couple that focus on it. Warner Brothers Interactive has done a great job building a business, really phenomenal job. Disney continues to focus on it. Then there are others who really exited the business, like Viacom, and then there are ones that are sort of in between, Fox. It does not seem to be a massive area of interest for traditional content companies. Not sure why, because it's the only growth industry in entertainment content and has been for some time. But probably a question better ask them.
Yeah. So with GTA, you probably have the largest user base of any console publisher out there. Is it? Well, okay.
That wasn't very good.
No. Is there a mechanism by which you can get that user base to register their information with you so that you can think about cross-marketing some of the other Rockstar or even the 2K products?
We have a lot of information because we have the Rockstar Social Club, and we know a lot about our consumers already.
Gotcha. So let's look into the Strapsonic crystal ball. So 5 years from now, do you think the installed base of the PS4 plus the Xbox Ones globally is greater than the PS3 and the Xbox 360 today?
Yes, I do, but I don't think you should put any stock in that whatsoever because it's just too early to know. I mean, the supply has been so tightly controlled, and someone we met with earlier said, this is a supply story, not a demand story so far. It's just too early to say. I think the good news is that consumers like the platforms, and I feel very, very good about them. I need to stress we're ecumenical, and whether these new platforms succeed or fail, we're bound and determined to succeed by giving people fantastic interactive entertainment experiences and making them available for whatever platform they consume them on. And if these platforms don't succeed, they'll be consuming them on other platforms, and they already do. But yes, if I had to, as a betting person, I'd say yes, and I'd specifically say yes because it appears that, and this is largely anecdotal, but tablets are a good example. All these new iterations of more and more exciting hardware seem to have picked up in velocity, generationally, compared to 5 or 10 years ago. But if we had a big market meltdown, for example, a repeat of 08 and 09 in 3 years or 2 years or 2 minutes, that would influence it. So this economy stays on this track, I feel pretty good about it.
Gotcha. And with that, we're out of time.
Thank you very much, all.